Riots, pandemic, over 30 million people unemployed, the worst economy since the Great Depression. And what's the stock market doing? The S&P 500 is near all-time highs. What is going on? This is Daniel with Unrivaled Investing, your guide to finding exceptional companies and unrivaled investments. You can follow me on this journey to find these types of companies by subscribing to this channel or going to unrivaledinvesting.com. Today we're going to talk about a few trillion-dollar questions. Are we entering a depression? Will the market collapse again? Did I miss a generational buying opportunity in March 2020? Are stocks cheap here? Just a reminder, 100% of the advertising revenue from this episode goes to charity. So please make a point right now. Hit that like button because the more people that like it, the more people that see it, and ultimately the more we can give to charity. Let's see what some of the world's smartest investors and billionaires are doing right now. Stanley Druckenmiller is one of the best hedge fund managers of all time. He previously ran Duquesne Capital Management, where over his multi-decade trading career, he had an average annualized return of 30% without a single down year. So he's worth listening to. So how did he answer these questions? He says the prospects of a quick economic recovery are unlikely and stocks are overvalued. David Tepper, another one of the best hedge fund managers ever, spoke out to say he was only 10 to 15% net invested and that this was one of the most overvalued markets he's ever seen. Warren Buffett, the value investing guru that built Berkshire Hathaway into a $500 billion behemoth, was a net seller of stocks in March and April. Given that he is one of the shrewdest investors in the world and that he already has a cash hoard over $130 billion, this seems like a pretty strong signal that stocks, even at their recent lows, weren't that cheap. Buffett, Tepper, and Druckenmiller, they are not alone. Other billionaires like Mark Cuban, Chamath Palihapitiya, and Carl Icahn have all said that they're holding back. Mark Cuban is raising cash. Chamath Palihapitiya said he's selling all his big tech stock holdings except Amazon, and Carl Icahn expects downdrafts in the market. Meanwhile, he just lost $2 billion from his ownership in Hertz, the rental car business, that was forced into bankruptcy due to COVID. So if you have all of these billionaires either selling or waiting for better bargains, why has the stock market rallied so fiercely since the March 2020 lows? I think Stanley Druckenmiller has the best answer. Liquidity moves markets much more than earnings do. So what's that mean? Since March 2020, the Federal Reserve has stepped into the public credit markets, creating literally trillions in new dollars. From March to May, the Federal Reserve balance sheet expanded by over $3 trillion. But why does creating tens of billions of dollars of cash each day impact stocks? The Federal Reserve buys Treasury bonds with newly created cash. Treasury holders sell their bonds and now hold this new cash. But their cash doesn't yield anything. So the cash goes into riskier assets that do pay, like stocks. This huge short-term injection is providing the equivalent of a sugar high for the stock market. And what happens if you eat too much sugar? You crash. The problem is that prices have gone up, but the underlying fundamentals of these businesses haven't improved. This is a setup for disaster. If anything, many companies have been decimated by COVID. The actions the Federal Reserve is taking isn't helping them with their business, and that's why Druckenmiller is pessimistic about the market. As Druckenmiller recently said, "The risk-reward for stocks is as bad as I have seen it in my career." Stanley Druckenmiller has been investing for over 4 decades, so this is a really bold statement. Let's break down his key points. So the risk-reward is terrible because prices are up due to liquidity from the Federal Reserve, but the earnings of many of the underlying companies have been decimated. Fundamentals drive the long-term returns for stocks, and yet the gains in valuation from this short-term stimulus could get wiped out in the future, with the only wild card being that if the Federal Reserve were to step up their asset purchases, i.e. buy more bonds or create more money, stocks could rip even higher. In the short term, fluctuations in valuation can have a huge impact on your returns, like right now. But over a multi-year or multi-decade perspective, the changes in valuation tend to get wiped out. Here's my take. Right now, we have an unstoppable force, the coronavirus, meeting this immovable object, government intervention. No one knows how it plays out. Maybe we could have record unemployment, and yet the stock market still explodes higher as the Federal Reserve starts buying bonds and stocks. Maybe the fiscal deficits start to outpace the Federal Reserve's new liquidity and stocks go into a free fall. Or even worse, Congress has to raise the corporate tax rate to pay for these new deficits, inflation, or interest rates pick up, and the stock market collapses 80% lower. The answer is that there's a wide range of possibilities, from ripping higher to down even more, and we should focus on what we can control. So what can you control? Focus on finding exceptional companies that have a long runway and offer something that's hard to get anywhere else. I call these types of companies unrivaled investments. They should have years of potentially obvious growth ahead of them. Next, pay a sensible price. If you overpay for a great company, it can hold down your investment returns, where even if the company is growing, the stock could still be dead money for years. Lastly, don't be hasty, but sit and watch your companies grow. Hyperactivity is the enemy of the long-term investor, and you want to focus on minimizing your choices just to finding the best companies you can at fair prices. I plan on talking about a few of these exceptional companies in our next videos. So until then, go to unrivaledinvesting.com, where by clicking on Unrivaled Journey, you can follow my personal financial journey and track my holdings each month to see what I'm buying and selling and what companies I personally believe are strong or unrivaled investments. If you like this video, please tap that like button, and if you're interested in learning more about potentially unrivaled investments, hit that subscribe button. And also, as a reminder, 100% of the advertising revenue from this video is going to go to charity. So the more likes, hopefully the more people see it, the more we can give to charity. Thank you for watching.